Hello and welcome back to Volatility 411. I'm Kevin Davitt, part of CBOE's Options Institute, and this is Monday, July 26th. Now this week is off to a relatively tame start after a fairly wild previous week, where the S&P 500 traded in a 4.2% range relative to the previous weekly close, and the small cap Russell 2000 moved in a 6% range. The calendar for this week is chock full of events. For starters, about a third of the S&P 500 names will be reporting earnings between today and Friday. There's also a Fed meeting and a Powell press conference. We'll get a preliminary look at GDP as well. Plenty to keep our eyes on data-wise. Now the week began with the S&P 500 at new all-time highs and a VIX index around 1720. Early on in today's session, the broad market is slightly lower and the VIX index is measuring around 1840. The VIX futures curve is in contango, but could more appropriately be described as quite flat. The spread between August and September futures is $1.20 wide with September over. But the spread between October, November, and December futures is about 30 cents. So the middle of the curve is very flat. Similarly, there's very little difference between Jan and March of 2022 futures. Now shifting to the options on the VIX and thinking in terms of volatility, the VVIX fell considerably last week. The measure of 1 month implied vol for VIX options moved up to around 150 on the S&P 500 sell-off of a week ago. Now, as the broad market rallied, VVIX moved down to about 115, which is right around where it's measuring now. So, this will be an exceptionally busy week for earnings. We have a Fed meeting. The market is at new all-time highs. The month of July will come to a close. We'll see how it all shakes out over the next few days. That's Volatility 411. Thank you very much for tuning in.